Peloton shares taking a hit in the pre-market. The company posts its quarterly miss, including a $1.2 billion loss amid weaker demand for its products. As Barry McCarthy is trying to ramp up this turnaround strategy, Jim, his letter talks about deepening losses, declining revenue, negative gross margins. He actually talks about his own experiences on a cargo ship in terms of trying to turn this thing around.
He did say, we've sounded the alarm for general quarters. Everyone at their station. Now, I thought this was important apropos of the cargo ship. When will we see response? Well, our goal is fiscal year 23. We just had fiscal year 2022 over. So I say you buy McCarthy. I'll give you a couple other reasons why. People feel it was a bad job because of the Amazon. That's wrong. Barry doesn't do that. He's talking about a London offensive with going international. Most importantly, Liz Coddington, a fantastic person in finance, is now going to be the CFO. Why is that necessary? Because the sloppy nature of the previous reporting is over. It's over. And the expense that they had in the last mile is over. The cuts, the needed cuts that they had, as painful as they were, in so many parts of the operation. What?
I don't know.
What did you say?
What do you pay for this thing?
11.
I mean... No, in terms of a multiple to eventual actual earnings or EBITDA, we're on a journey to reach sustained positive free cash flow, but right now we're averaging negative free cash flow of $650 million a quarter.
The fundamentals are suboptimal. The fundamentals are suboptimal.
And so, okay, you're on the journey. When you get to that journey by the second half of fiscal year 23 and reach break-even cash flow, but Jim, in all seriousness, how do you figure out what to pay for this thing?
In actuality, you're just making a bet that this man can pull off a situation that is, frankly, almost impossible for everybody else.
Well, the COO did say that searches for Peloton product on Amazon, even before they had a presence, were averaging 500,000 a month. They're going to try to leverage that as they continue to deconstruct the vertical model.
Yeah, look, it isn't if it were just the end of the pandemic, the company would be in trouble, but John Foley uniquely created, I think, one of the worst, most, let's say, poorly run on a day-to-day tactical company I have come across. David, I think that Foley must have thought the pandemic was a forever war.
Would never end.
So did Shopify, and so did a ton of companies that have issued mea culpas on that front.
Well, have you seen Foley's mea culpa?
Yeah, but he spent so much more money. He changed everything based on sort of these outlandish predictions in terms of sales.
Right. I might see him tonight, so I want to be a little more measured in my terms. Measured like many of them. But he did a terrible job.
Well, average monthly workouts per sub down 21 quarter on quarter.
I searched for a metric that was positive.
Yeah.
And the only metric I could find was that the call did end.
Oh, my God.